Hello, everyone. Welcome to another insightful session of our weekly price action based technical analysis series. Today, we will be focusing on the GBP USD market structure. Before we begin, I want to emphasize that this video is for educational purposes only. My intention here is to provide you with valuable insight into the GBP USD chart and, of course, enhance your price action analysis skills. However, remember to approach trading with caution and seek advice from professionals before making any financial decisions. I have conducted a comprehensive price action based technical analysis on the cable market structure using simple setups such as trend lines, key levels, and of course chart patterns to gain valuable insight into the market's dynamic. Last week's trading setup presented interesting selling opportunities despite the accumulation zone we identified in our video, resulting in over 400 pips of favorable price movement from multiple entries. As you will see in here, we were selling the GBP USD throughout the course of last week, and even despite the interest rate hike, we still saw price action push to the downside a little bit before we begin to see some buy traction resume on the last trading day of last week. If you are eager to review this commentary for educational purposes, find the link in the description box below or at the top right hand side of your screen if you are watching from my YouTube channel. Now, with the groundwork laid, let's dive right into the business. Now, the first thing I did here was to go a little bit higher into the daily time frame where I do want to have an holistic perspective of what is really going on in this market. And what I was able to do here was to take into consideration the nature of price action since the beginning of the year. And of course, if you look at the structure closely, it is quite obvious that price action has been very, very bullish. And to further emphasize the strength of the buyers in this particular market, I was able to connect the series of higher lows here, giving us this beautiful ascending trend line, which is going to be one of the major parameters that we are going to be using to guide our trading activity for this week. Now, in addition to that trend line is this key level situated at the 1.2700 area. As you will see, since the month of May, this level has been a major determinant of price action. Now, look at what happened here in the month of May. It was initially a selling niche at some point. Then we saw how price action did broke out of that level in the month of June. We saw an attempt by the sellers to push price, which came to become a retest of structure during the later part of month of June stroke the first day of the month of July. And with this breakout here, we have seen price action found a new peak at the 1.31450 level before we saw a nosedive in price action. And right now, price action is back into that key level and, of course, the ascending trend line we identified earlier. Now, at this point in time, you would agree with me that we are at a crucial point in the market where both the ascending trend line and the key level here shares a beautiful confluence. Now, going into the new week, what is going to be our plans? Are we going to see a situation where price will respect the ascending trend line one more time to drive another wave of bullish momentum? Or are we going to be seeing a scenario where the breakdown of both the ascending trend line, the 1.2700 level, and of course that demand zone there to incite a sell off in this particular market? So, with this information we have gathered here on the daily time frame, it is quite obvious that we are at a crucial point where both sellers and buyers have a potential of pushing price in their favor. Now, to help us identify what is going on here from an much more clearer perspective, we would need to scale down into a much more lower time frame to see how the market has reacted to the zone in the second half of last week's trading session. But before we go into the details on that one, I would like us to go into the economic calendar to see what fundamental factors that could help drive price movement and, of course, affect the sentiment in the market around that zone. And by now, for those who have been with me for a while, you would by now know that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And in fact, while trying to scoop the event for this week, I was able to come up with a handful of high impact events coming in from both the US and the United Kingdom's economy. So the first high impact event for next week is coming in on Thursday, and that is August 10th. And we have the consumer price index from the US economic docket. And the consumer price index is the measure inflation impacting the purchasing power of consumers and influencing market expectations about central banks' policies and interest rate. Then on Friday, August 11, we have the gross domestic product for quarter two from the United Kingdom, which of course provides insight into the overall health of the United Kingdom's economy, impacting investor sentiment and influencing trading decisions too as well. Then later that day, we have the Michigan Consumer Sentiment Index, which gauges consumer confidence, which has a direct impact on consumer spending and economic growth. Now, with this event here, we all know that this will, of course, reflect on the chart as price action. That is the anticipation of this event. So with that being said here, we'll go right into the 4 hours time frame where I was able to identify a simple setup that we are going to be using for this week. Now, looking at the structure here, you will see that as soon as price got into the 1.27 area, that was on Wednesday of last week trading session, we begin to see some buy traction resume around this area. Now, if you look at the nature of these candles, when price action did come into this area, it gave us a couple of hammer candles around here, which from a technical standpoint reveals the presence of buyers around that area. Now, will the buy pressure around this area incite a bullish move? Well, to guide that move, I have a level here had the 1.278, which of course was a determinant of price action throughout the second half of last week's trading session. So I would want to see price breakout retest the 1.278 to start considering buying the GBPUSD for this week. And if that is not the case and the contrary happens, where price drops below the key level and the ascending trend line, then significant confirmations that buyers are finding it difficult to stay above the structure will be a beautiful sign to join a bearish move to the downside. But trust me, I will be with you in the comment section during the early hours of the week to give you an insight of what I think will happen after monitoring how participants in this market will be reacting to this current structure around this area. If you have found this content helpful in making your independent trading decision for the upcoming week on the GBPUSD, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.